భుజాలు తట్టనేస్తమే సభలకు వచ్చిన వితరణనిచ్చిన ఆ మాతృమట్టి కోసమే 90లోనే బీజం వేసి చెట్టైంది ఇవ్వాలిరా ఎన్నారైనా చిక్కట్లలో పెట్టింది దీపాలిగా తెలుగు సంస్కృతికే అన్నీ హోరెత్తిందిరా జగతిన తెలుగాడి జెండా పైకెత్తిందిరా వాషింగ్టన్ డీసీ వీధులు పోటెత్తాలిరా లోకం తెలుగాడి ఖ్యాతిని చేకొట్టాలిరా
ఆకాశమే అక్కై అలరించే ఈ వేదిక ప్రతిదారికి ఆహ్వానమంతమే రారెల్లిక
కళల వైభవం యువత ప్రాభవం ఆట మహోత్సవం జరాలి అందరం చూడాలి సుందరం రెండేళ్ల కోసం భరం విచ్చేసిన తారాలోకం వినోద విన్యాసాలు వచ్చేసిన ప్రతిభకు ఇచ్చే సన్మాన ప్రోత్సాహాలు తెలుగు ఐక్యతకి ఆట చేసే వ్రతం చూడ పలికింది నీకు సుస్వాగతం వాషింగ్టన్ డీసీ వాషింగ్టన్ డీసీ వాషింగ్టన్ డీసీ వీధులు పోటెత్తాలిరా ఎత్తాలిరా లోకం తెలుగాడి ఖ్యాతిని చేకొట్టాలిరా కొట్టాలిరా
అందరికీ నమస్కారం. నేను విజయ నాదెల్ల. ఈరోజు మనందరం ఆటావారి ఆధ్వర్యంలో చాలా ఎడ్యుకేషనల్ వెబినార్స్ జరుగుతున్నాయి. అందులో భాగంగా ఇప్పుడు ట్యాక్స్ సీజన్ వచ్చింది కాబట్టి మనకి ట్యాక్స్ విషయాలు తెలుసుకోవడం కోసం ఈ ఎడ్యుకేషనల్ వెబినార్ కండక్ట్ చేస్తున్నాము. అది కాకుండా కొంచెం ఇంట్రడక్షన్ చెప్పాలి అని అంటే యాక్చువల్గా అవసరం లేదు. అమెరికా తెలుగు సంఘం గురించి ప్రపంచవ్యాప్తంగా అందరికీ తెలిసిన అతిపెద్ద తెలుగు సంఘం. దాంట్లో అందరికీ తెలుగువారికి సంస్కృతి సాంప్రదాయాలు అన్నీ ఆదరణ, అదే ముఖ్య ఉద్దేశంగా ఈ సంఘం ముందుకెళ్తూ ఉంది. మన అందరి సహకారం ఆ సంఘానికి ఇద్దాము. వాలంటీరింగ్ చేయడానికి చాలా ఆపర్చునిటీస్ ఉన్నాయి. వచ్చి ఎవరైనా జాయిన్ అవ్వచ్చు. ఎలాంటి కార్యక్రమాలైనా ముందుకు తీసుకెళ్ళచ్చు. మన యువతకి ముఖ్యంగా వచ్చే తరానికి తెలుగు గురించి, తెలుగుతనం గురించి, తెలుగు సంస్కృతి సాంప్రదాయాల గురించి అందరినీ టచ్లో ఉంచడానికి అని చెప్పచ్చు. పైగా అందరికీ తెలియచేయడం, జానపదాల దగ్గర నుంచి కూడా మనం మన తెలుగు పిల్లలకి నేర్పించుకోవడానికి ఆట చాలా మంచి వేదిక. భువనేశ్వర్ భుజాల గారి ఆధ్వర్యంలో చాలా ప్రోగ్రామ్స్ జరుగుతున్నాయి. ఇది ఒక ఎడ్యుకేషనల్ ప్రోగ్రామ్ మాత్రమే కాకపోతే సాంస్కృతిక ప్రోగ్రామ్స్ కూడా చాలా జరుగుతున్నాయి. అవి తెలుసుకోవాల్సిందే. ఇందాక స్లైడ్లో చూసినట్టుగా ఆట మహోత్సవాలు జూలైలో జరుగుతున్నాయి. అందరం ఆ పనుల్లో బిజీగా ఉన్నాము. మీరు దాని గురించి తెలుసుకుని అందులో భాగం కూడా పంచుకోవచ్చు. ఈరోజు మనకి రామ్ అసోసియేట్స్ నుంచి ట్యాక్స్ ఫైలింగ్ గురించి, ట్యాక్స్లో కావాల్సిన టిప్స్ అన్నిటినీ, అది ఇండివిజువల్ ట్యాక్స్ ఫైలింగే కావచ్చు, జాయింట్ ట్యాక్స్ ఫైలింగే కావచ్చు, బిజినెస్ ట్యాక్స్ ఫైలింగే కావచ్చు. ఆయన ఎప్పటి నుంచో సిపిఏగా ఇక్కడ జెర్సీలో ప్రాక్టీస్ చేస్తున్నారు. ఈరోజు ఆయన మనతో ఉన్నారు. చాలా విషయాలు ఆయనతో మనతో పంచుకొని ఉన్నారు. అలాగే మీకు ఏమన్నా క్వశ్చన్స్ ఉంటే యూట్యూబ్లో కింద కామెంట్స్లో తప్పక పంపించండి. సాధ్యమైనంత వరకు అన్ని ప్రశ్నలకి సమాధానాలు ఆయన నుంచి మనం తెలుసుకుందాము. రామ్ గారు తెలుగు కాదు కాబట్టి ఈ ప్రోగ్రామ్ని ముందు నుంచి ఇంగ్లీష్లో కొనసాగిద్దాము. లెట్ మీ ఇంట్రడ్యూస్ రామ్ సార్ and the CPA from New Jersey. Welcome to the program, sir. And
Good morning, all of you.
To ATA, and we have so many other members, ATA members, watching this program today. I'm so good that you cannot speak Telugu, but you are still associated with
Yeah.
ATA. And this is a very good webinar that we are doing on behalf of ATA to educate the taxpayers, because the tax norms are changing every year and then. With the
Yes.
COVID situation, we have many things coming into the picture. I want you to start with the basics, like how an individual, a single person can start doing the tax here, because so many people are coming from India to here on student visas and starting their CP, whatever the visa, OPTs, CPTs, and all, and they start earning money little by little
Yeah.
before the bigger buildings.
Yes.
So start your journey, like how an individual can avail your services, and what are the good tips that you can give to them, joint filing or single filing or business filing, and then we'll deep dive into other critical issues as we go on this journey. Welcome to the program, sir.
Thank you. Good morning. Good morning to all of you, and thanks for inviting me in the American Telugu ATA Association. I'm very proud to be associated with the organization. So let me tell you, yes, we deal with, we have been a practicing CPA firm for over 35 years. We work with small business, individuals, partnership, corporation. We assist them in not only preparing taxes, we assist them with financial accounting and compliance requirement. We are a full service accounting firm, and people who want to incorporate a business, whether we have a lot of clients approaching to incorporate in the US from India. And so we advise them on various matters. And we are always happy to work with them, help them wherever we can. To start with, filing a tax return. If you have earned income, if you have wages or any consulting income, then you want to file a return. With the foreign students, the F1 visa, there is a lot of confusion whether we should file as a 1040 NR, 1040, how do we file it? There is a lot of confusion. Everyone gives different opinion, but we always recommend your long-term goal is to be a resident in US, file a resident tax return. There is a provision that allows you to make a first-time election to file as a resident tax return. So there is no exception to that one. So, we suggest, because that is a good thing to start. Okay. Now, as an individual taxpayer, as a W-2 earner, wage earner, what are your options to save some money? Okay, you can start, one of the things you can do is you can look at a retirement plan. Maybe you want to put some money into an individual retirement account, which may save you taxes. Depending on your tax rate, tax situation, you save money. Okay, so maximum you can contribute in the first year, is 6,000 to an individual retirement account. When you do a traditional, which is called a traditional IRA, you reduce your taxable income by the amount of your contribution. So let's say your maximum allowed is 6,000. You are under 50 years of age. If you're over 50 years of age, you can contribute an additional 1,000. So let's say somebody earned $30,000 in the first year as a student, you put away 6,000, your taxable wage becomes 24. And then there are itemized deduction, standard deduction allowed, which reduces your taxable income further. So, as a W-2 earner, your options, unless you have, a mortgage, property tax, your option to reduce taxable income are limited. There is an amount. If you contribute to a charity, you are allowed to deduct maybe up to $300, plus your standard deduction, which will be $12,500 if you are single, 25,100 if you are married filing joint, and you can reduce that amount from your taxable, and you pay tax on the net income. If you have kids, if you have other dependents, you get additional tax credit for dependents. The last 2 years, the government has been giving a lot of other special benefit, childcare credit, earned income tax credit for low income people, low income earners. There is a recovery credit, the stimulus payment people were eligible. Maybe in 2020 they gave away 1,800 per individual. In 21 you can get up to 14, but it all depends on your filing status, your eligibility, and other factors. Okay, as a joint filer, it is always good. As a joint filer, you save more, your tax rates are more favorable as a joint filer. Again, it depends on each individual case. In some cases, married filing separate may work out better, but it all depends on the numbers that the taxpayer has. Both of them are high earned income earners. Maybe we can try, as a married filing separate, see if it benefits. But generally, married filing joint gives you more tax benefit. Your exemptions are more, because married filing separate, you lose some of the benefits, some of the credits. If you have college going kids, maybe you will be eligible to take a tuition credit. If you have self-employed, you have your own business, there are a lot of credits available for them, and that is, so each case is different. It depends on the income earned. It depends on what are the options that the taxpayer is willing to exercise. For example, if somebody has his own business, maybe you want to contribute to a retirement plan, okay, which can be a 401k plan, IRA, or a simple plan, or a simplified SEP plan. Each one has limitations on how much you can contribute, and also it depends on the nature of the business. So, there are a lot of tax credits that you can, if you buy a new car, electric car, you get a credit. If you do home improvements, you get credit. If you, for people who are established here, if they have a solar, if they install solar, you get another credit for solar, 26%, you get big credit. So, you want to look at each individual case and see what is the best option for me and what kind of credits or deductions I want to claim. This is just to start with, then maybe we'll go into each and every case, based on the.
So to summarize, you are saying that individuals, if they are filing single, they have to file as a resident, and the married, whoever is filing, they have to file it jointly and look
They
for.
don't have to, they can file joint, yes.
Yeah, when they file jointly, they will save something. They get the
Yes,
tax. And
definitely.
how to look for incentives, how they can save the tax by looking into their requirements, such as installing a solar system, or doing a betterment or something to the home. Those are all they can claim as a incentive, and
Yes,
can get tax credit.
credits, yes.
So okay.
See, if for regular wage earner, one of the savings is if the employer offers a retirement plan. They should definitely consider joining the retirement plan, because what happens is any contribution towards the retirement plan reduces your taxable income. So you come to a lower tax bracket when you
Yeah,
contribute. Let's say
I have
in
a question
401k.
there.
Yeah,
So, employer offers retirement plans to certain extent. Let's say 6 times of the salary or 4 times of the salary, whatever the employer is offering. But how else we can contribute to our own retirement funds? See, topping the employer contribution is not enough for the future needs, it's definitely
Yeah.
not. So how are we going to contribute more to our own retirement funds?
Yes. See, one other option you have, let's say you have a retirement plan. So you may be limited to contribute to the individual retirement account. The individual retirement account, you can contribute $6,000. Let's say, since you have a retirement plan from the employer, you can do a backdoor Roth, which is nothing but you contribute to a traditional IRA account. You do 6,000 or 7,000, depending on your age. Then you turn around and convert that contribution to a Roth. Because there are income limits. Let's say you made over $208,000 a year. Then you will not be eligible to contribute to a Roth or IRA. But you can contribute to a traditional IRA, which becomes a non-deductible because you have exceeded the income limit. Then you turn around and convert into a Roth. So what does it do basically? A Roth, you do not get a current deduction. That means you don't reduce your taxable income immediately. But when you take the money out at retirement after 59 and a half, those earnings are not taxed. This is one way a lot of rich people do it, because what happens is they have no taxable income because all money is in Roth, which is a great tool.
Because you brought up Roth IRA, let me ask you this.
Yeah.
So we are converting our previous 401k funds into the Roth IRA, right? Let's say I have 100 grand and I put it into the Roth IRA, but on a yearly basis, I only can contribute 6,000 to the Roth IRA, not more than that.
No, yes. No, go ahead, finish your question.
So, so if I want to contribute more than 6,000, what are my options?
So to the first question, let's say you want to convert from your 401k to Roth. That
Right.
you can do. There is no
That I
issue.
only can do with the past employment, not with the current employment.
Say if your current employer offers a Roth 401k, then you can contribute to Roth 401. Okay, for 2022, the limit is 20,500. Okay, in 21 it was 19,500. So 20,500 you contribute to Roth IRA, Roth 401k. You don't get any current deduction, but then the money when you take out at retirement, it's all tax. That's
So
one way.
traditional IRA is only 6,000, whereas Roth
Only,
1K is 20,000.
yeah, 401k, the limit is 20,500 per year. If you are somebody is over 50 years, you get an additional 6,000. Okay.
So if I have to roll over my past retirement funds,
Yes.
can I roll over that to the Roth 401k?
Yes, you can do that. When you do that, you will have to pay tax on the amount you roll over, but there won't be any early payment penalty. See, generally, if you take the money out, there is a 10% penalty on the money you take out. But in a Roth, conversion to a Roth, there is no penalty, but you can convert. But you have to pay income tax. Okay, so sometimes a lot of people, when we plan, if 1 year my income is down, that's the year we will convert into Roth. So I pay a lower tax.
So whenever we talk about Roth IRA, is it only Roth 401k or is there a different Roth IRA?
Yeah.
Is it also a Roth 401k?
No, there are two things. One is a Roth, a IRA, and the Roth IRA. The limits
That's what I
are
mean.
$6,000.
People really don't know about, they all talk about Roth, but they do not know the different components and different vehicles of Roth.
Yes, yes. See, there is the traditional IRA, is the maximum limit is 6,000. There is a Roth IRA, which is the 6,000. And if someone is over 50, they can contribute an additional $1,000. I mean, the limits may change. They have not changed recently, but maybe in the future it will change. There is a Roth IRA also, which a lot of companies and individuals are using it now, which is you can contribute your 20,000 limit to a Roth IRA. So there is no deduction, current deduction, but when you take the money out, there is no tax. If you have your own business, then you can contribute a lot more. So let's say you have your own company and you can contribute the employee portion. There are two portions. One is the employee, one is the employer. The employee portion is, let's say, 20,500. The employer portion will be 25% of the wages you take. So let us say I have my own business. I take a salary of $100,000. So I put from my wage 20,500 towards my contribution. Then the employer can match 25% of 100,000, which is another $25,000. Okay. The maximum limit, yes, an additional amount. The maximum limit for that will be $58,000. And if you're over 50, it becomes $64,000. So that is the IRA and the 401k. There is also a defined benefit plan, which lets you contribute a lot more. If you have your own business, if you have a defined benefit, you may contribute more than $200,000.
This is so tricky. Nobody so far, I think, only know one part of it, that they can only contribute up to 20,000 as an employee or employer.
Yeah.
It's a fact that as an employer you can contribute some amount, and as an employee you can contribute some amount, being the owner of the business. That's a beautiful tip that you have given.
Thank you.
So do so, is it tax exempted? For the, let's say as a business owner, I'm contributing 25,000, and as an employee of the business owner, I'm contributing another 25,000. So together 50,000. Is it all tax exempt?
Yes. See, the employer deducts $25,000 from his taxable income. And the employee, when they contribute, they don't pay any tax on the income. It reduces the taxable income. Okay, if it is a Roth 401k, they don't get any current deduction. So, for example, if your salary is 100, I contribute 20,500 Roth, my taxable wage will still be 100. If I take a regular 401k, if I contribute, let's say 20,000, my taxable wages is 100 minus 20, I pay tax on 80,000. So each one has their own requirement. Somebody is in a high tax bracket, maybe they may consider a regular 401k. Okay. If I have my own business, I may consider, if I have the money, if I make, income, then I can choose a defined benefit, which let me contribute a lot more, maybe more than $200,000.
So if I contributed to the Roth IRA, 401k, can I still contribute to the traditional IRA, or I cannot?
You can, again, as I mentioned, the limits of your wages. Okay. Let's say your wage is over $200,000, $208,000. So you contributed to 401k. You can do a traditional IRA and convert into Roth. You can do that.
That's a wonderful trip. These are all things really nobody knows unless they get into the details,
Details. Yes, absolutely. It is
Like we only
lot of
know the
complications,
superficial
lot
part
of
of it.
rules. Yeah.
And I would like to really conclude the Roth with one question. What is the backdoor IRA?
Yeah. The backdoor, as I mentioned before, let's say my salary is over the threshold. Okay. Depending upon whether your filing status is single or married filing joint or head of household. Okay, let's take a simple example, married filing joint. So if I make more than $208,000, I cannot contribute to Roth. I cannot contribute to traditional IRA. IRA. But I can do a traditional IRA, let's say $6,000, which I won't get any deduction. It is called non-deductible IRA. I immediately turn around and convert into Roth. So when I do a conversion, I have no taxable income because you will get at the end of the year a 1099 showing you withdraw $6,000 from your account. But then you immediately deposited the money into a Roth. So there is no taxable event happening in this situation. I mean, that is what a lot of people contribute. There is also a super 401k, but we won't even talk about it in this, which is too confusing. But we'll stop with the backdoor Roth. And that is called a backdoor. Okay. So you are allowed to contribute another $6,000 when your income is over the limit, but they still allow you to contribute an additional 6,000 or 7,000 based on your age.
Okay, so let's talk about the capital gains. How
Yes.
can we save on capital gains? Let's say I sold a home and I made lots of money. How can I save, and what are the vehicles to save the money on my capital gains?
The first rule is with sale of a home, if you make a profit more than $500,000, if you are married filing joint, then only you will have a taxable gain. But if the gain is less than 500,000, there is no gain on sale of your primary home. Okay. So having said, what's that?
It's the primary home only. Let's say the
If it's a
investment.
primary home, yes. And you can do this every 2 years. So I can change my house every 2 years. Okay, I can buy a home after 2 years, I can sell, I won't have any capital gain on the sale of my home, primary, up to $500,000. Okay, now how do you calculate the capital gain? So I buy a home, I make some improvements to the home. That increases the
Let me
basic.
stop you there. I'm sorry. So you're saying we can change our primary home every 2 years. That,
Yes.
I have to vacate my old home and get into the new home, or I can just nominate my another home as a primary home.
No, I mean, not nominate. See, let's say I'm living in a house, primary house now. After 2 years, I sell my home. Okay. Okay. If I don't sell, let's say my job requires me to move to a different location. I buy a home in the new location. Okay. You must, live in that house. I mean, your primary abode, place of living must be that second home where you move. Then if you stay there for 2 years, then you will get the exclusion. But you cannot have two houses. I live here today. I mean, there's
No, yeah.
rules
Let
that
me
you have to
ask you
follow.
this. Many people, they will have one in northeast and one in south because of the weathers, right? Like
Yes.
most of my colleagues, they have like one home in Jersey and one home in Florida, and it's not investment purpose. It's for their own purpose. They stay here for summer and they stay there for winter, something like that. So they have two primary homes. Why can't one person have two primary homes?
And you can have as many homes as you want.
No,
But
the primary home.
there is rules on how many days you stay in the house. Okay, so if you are spending 180 days in one, 185 days in the other, the one where you say more number of days becomes your primary home. So there are a lot of rules, where you spend most of your time, you know, where you get your mail, regular mail, but you cannot have two primary homes. The second home becomes, your investment home or a second home, but it's not the primary home.
Got it. So, regarding the capital gains, right? Can we talk more about how we treat our stock losses and profits? And
Yes.
as The crypto business right now because people are making lots of money on Bitcoin.
Yes.
And nobody knows how to treat and how to get the tax incentives on such gains. Could you please speak more about those capital gains?
Yes. See, generally in a capital gain, you always want to try to get the long-term capital gain treatment because the long-term capital gain, the rates can be 0 or 15 or 20, depending on the income. Okay, so I mean, so a long term is more than 1 year. So if you hold an asset for more than 1 year, you get the long term capital gain. See, generally, what happens when you're dealing in stocks, year in tax planning,
So
let's
what
say you
about the
will,
day traders then? They don't hold anything for a year.
yes, day traders, yeah, every day they are selling, yes. So day traders, when they, if you are making a lot of gain, then you can be a day trader. The income generated from day trader, you can contribute to a retirement plan. Secondly, the income from day trader, you show it as a Schedule C as a business. The income, you can claim regular expenses on the, like your margin interest or your expenses of running your day trade, contribution, I mean, you buy subscription to various investment and it is also not subject to self-employment. There is, so they have to look at those things. If you have a wash loss, you do a trader. We have a lot of guys had big loss. Maybe, as a day trader, you don't recognize the wash loss. Everything is total sale minus total cost is a gain or loss. So there is benefit to be a day trader. But let's say a traditional individual who buys investment regular, not a day trader. Uh, so there is long-term gain, short-term gain. Long-term gain, you get taxed at a lower rate depending on the income. If your income is less than 450, you get taxed at 15% plus 3.8% Medicare tax or investment tax. If your income is less than 40,000, then you have zero tax on the long-term capital gain. But if somebody is over the 500,000 threshold, joint filing, then your tax will be 20% plus 3.8%. Okay, 23.8%. So your goal should always be to see if you can get a long-term capital gain. So let us say I'm looking at my portfolio. I have a lot of gains, but there are a few stocks which are dead stocks. I have a lot of losses. Maybe I will consider selling them, realize the loss. So I reduce my taxable income. Then I will buy back after 30 days, 31 days. So, so I reduce my taxable gain. That is one way to reduce your taxable income. The second one, let's say your parents are in a low income tax bracket. You can give them appreciated stock to them, let them sell. So they recognize the gain. They are in the lower tax bracket. So that is one way to reduce your capital gain. Maybe you have a charity. You can give appreciated asset stock to a charity. So you get the fair market value. You don't recognize the gain, the charity recognizes the gain. Then you defer all the gain to the charity. You don't pay any tax on the, So each case is different because everybody has their own objective, what you want to do. And, but you can play a lot with capital gain, long-term capital gain. And so you have to look at all the options. Again, each individual has their own objective, what you want to do. I mean, you can give to your kids maybe, but then it may trigger kiddie tax. But again, we can look at all options. You cannot have one solution for all.
I have two questions on capital gain. How much I can exempt my loss? Like, let's say I made this year I made like 30,000 loss in stocks, how much I can claim, and can I spread that to more than a year, like a couple of years or 3 years? Can I spread my loss to 2 to 3 years, like defer my loss?
Yes.
Can I do that?
Yeah. The maximum loss you can claim in a year is $3,000.
That's
So
it.
the 3,000, yes. So the unused loss get carried over until you use it. So let's say this year I lost $30,000. The next year I made 40,000 profit. So the second year I can use all the 27,000 loss carryover against my gain. Okay,
So
for
we
federal purpose.
over multiple
Yes,
years.
yes, absolutely. I have
That's
clients who lose $1 million 1 year. Second year they make $2 million profit, so they use up the losses.
so that's a sign that we should not invest more into the regular stock market.
I mean,
I'm
that
just
is
kidding. Yeah.
that is
It's a personal
individual
choice.
choice. Some
It's a
people
personal.
are risk takers.
So to summarize, you're saying there is not much of a capital gain when we are using a or selling a primary home, right?
Yes,
And
yes,
secondly, however, how much loss we incur in trading, we only get the $3,000 of incentive. We can only exempt $3,000, even if
yes.
the 30,000. And third thing is like we cannot spread the losses across the multiple years.
Yeah, I'm going to tell you one or two exceptions. Let's say there is you invested in a stock. Okay, if they have elected to be taxed as a 1244 stock, then you can write up to $100,000 of the stock in this 1 year. Okay, that's the first one. Then, if you are invested, if it is a business loss, total business loss, maybe you can claim all of the loss in the same. Okay, it doesn't go as a traditional trading loss. It's a business loss. You can claim total loss in the year it happens. Okay, and there is a third exception. If you are a C corp and you held the stock for more than 5 years and you sell the stock, there is a small business tax exclusion. Up to $10 million of gain may be excluded from the gain. Okay, but there are rules. You must have held the stock for more than 5 years. The gain is limited to 10 million. There are other rules to follow, but a lot of our clients make use of these things because a lot of our clients are selling businesses because the market opportunity is good. I mean, these are the couple of exceptions, but generally, yes, the 3,000 is the maximum limit you can take in a year on a regular investment. And
So what if I incurred like 50,000 loss as a startup company? What do I
yes,
do?
you can, if you are a 1244 stock, if you're a C corp, let's say,
Yeah,
then
it's
you can
C
take,
corp, and I incurred $50,000 of loss.
yes,
And how am I going to file my taxes?
okay. See, if you are filing as a partnership, okay, the loss flows to the individual partners. They can claim the loss provided
Like
they have a
how much
basis.
they can exempt? How much they can get the exemption?
They take the full amount of the loss provided they have a basis. They have the stake in the business. Okay. If you say S corp, it's a flow through. They can take the loss. Again, they must have basis in the company. If it is a C corp, then the loss stays in the company, gets used when they make profit because it's not a flow through. Okay, if the company closes, okay, you ready to dissolve the company, then you can claim the full loss as a C corp stock if you're a 1244, or you can take a liquidation loss completely in the year it happens.
Okay. Sorry, I was checking for comments. If anybody has any questions, I was checking on the comments, but I do not have any questions there.
Sure.
To speak, or I would like to know more about the COVID stimulus. many people are getting the COVID stimulus.
Yes.
Tax exempt. How are we going to show the tax stimulus, whatever it is?
Yes. Okay. The first thing is, if at the individual level, people get the stimulus check, $1,400 per individual. Those
Exactly.
income are not taxable.
Nothing is taxable.
They are not taxable. And if you had a newborn child last year, you will get another $1,400 when you file the tax return this year. Corporations received the PPP loan, the EIDL, um, a loan of up to $10,000. The PPP loan, if it is forgiven, they are not taxable. You'll show in the tax return, but they are not taxable up to the amount of loan forgiveness. Let's say I received $150,000 of PPP loan 1 and 2, and I get total forgiveness from both of them, then I have no taxable income. New Jersey and several states gave special grant to a lot of small businesses. Okay. They will be exempt from the state tax, but for federal tax, they will be taxed. So if I receive a
Tax is fully
$15,000,
exempt. So
what's
the
that?
tax, the state tax is fully exempt.
State tax is fully exempt. But if I got a 15,000 grant from New Jersey, for federal purpose, I'll have to pay the tax. But for state purpose, it will be exempt.
Good. So let's move on to the gift tax, okay? And the most important one, and I bundle everything for you. The first thing is, how do we handle the gift tax? And secondly, what is the limit for parental estate? And what if after we cross the parental estate? And thirdly, what is the best way or best instrument to pass on our legacy, our estate to the next generation? So I bundled up everything for you.
Sure, no
Please
problem.
about
Okay.
gifting the tax and will and transferring to the legal heirs.
Yes. See, the gift tax this year up to 12.06 million is exempt from gift tax. So I can give 12.06 million to my kids. My wife can give 12.06
As an individual, without
as an
any
individual. Yes.
trust or anything, you
Yes,
don't
I can
have
give it.
trust.
Can you repeat that? I'm sorry.
Do I have to have a trust to pass on that legacy, or a trust is not required? Whatever the 12 million.
So let us look at the basic, then we will go into the trust.
Okay.
So let us, I can give every year, 2022, the limit is 16,000. So I can give $16,000 to each of my kids or to anyone. I don't
Yeah, that's what
file,
I'm asking. As an individual, but not as a trust.
not as a trust. No.
Okay.
Okay.
As an individual, as a father, you can transfer that to your kids.
Yeah, I can give 16,000 to kids or anyone I want. My wife can do the same thing. Okay. I don't have to do anything. Now, if I gave them more than $16,000 to an individual, there is no tax, except I may have to file a gift tax return. Form 709, a gift tax return, the lifetime exclusion is 12.06. That means I can give $12.06 million of gift to my kids, and they won't pay any tax, and I have no tax liability. Similarly, my wife can give up to 12.06 million, and there is no tax. So let's say I give my kids $13 million. So they will be taxed
Your kids
on,
30 million.
so they will be taxed on the difference between 13 minus 12.06. That is what the tax. The tax rate varies from 10%, the maximum rate is 40%. Okay, over $1 million in gift over the limit, you pay 40%. Okay, that's the basic. Now, how do I
Recording stopped.
how do I transfer the assets? Okay, now
Recording in progress.
how do I transfer the assets to my kids? Okay, you can set up a trust. Okay, a will is a document that is effective after your death. So you say, hey, give this to these people, whatever is in your will. That's your last wish. A trust, okay, a living trust is what you set up and you transfer the asset to the trust and you name the
What is the
beneficiary.
benefit of having a trust? Because as an individual, you can transfer up to 12 million. So why do we need a trust?
Okay, why do we need a trust? Very good question. Okay, let's just say the kids are small, young. You don't want to transfer the assets to them when they are young. So you create a trust, transfer the assets to the trust, and make the kids the beneficiaries of the trust. Okay, so this way, and you either be the trustee, that means you manage the trust, or if you are incapacitated, you can name someone as the trustee. They will manage the assets of the estate. Okay, that's the reason why you want to get the trust. And the trust, if something happens to me, the trust document specifies what needs to be done, and there is no issues for the kids getting the assets. Okay, so it is always better. A lot of estate planners, they suggest to have both a will and a trust. Okay, a will is what you say when after your death, it tells you how to distribute your assets. The estate continues, the trust continues after you're done. So there are various types of trust which we will not discuss. I mean, if you want to transfer your trust to your grandkids, if you want to transfer your trust to other relatives, so you can have different kinds of trust. You name the beneficiary, and so that is the reason why you want to create trust. Maybe it keeps the creditors away from the assets. Okay. And so that is how you transfer your wealth to your kids.
So still the trust is the best instrument to pass on the
Yeah, I mean,
estate.
there are various ways. I mean, let's say I have only a small real estate. Okay, a lot of people, what they do is they form a LLC, limited liability company, where you may be the 1% general partner, the kids are limited partners. Because what you do is you want to do income shifting as well as ownership shifting. And over a period of time, you transfer the income to them, transfer the assets to them. So, each kid gets a proportionate share of the assets.
So even for the primary home, right? Do we need a
Yes.
trust, will and legacy, everything?
Yes, absolutely. People
Primary
do
home.
a trust and put the family assets, all of the assets, including the house, so that can be transferred to the kids, or it continues, after your life, it goes on. And you have appointed trustee, who you trust, and they can continue manage the affairs of the trust.
Okay. So when do we start planning for the trust and estate and all these things? What is the right time and
A lot of people think I don't have any assets. I should not have it's always good to have a will. You can set up early age. There's no And you can start a trust as you start building your assets. Maybe you can have a trust. Slowly you build the assets and build the trust. Or maybe if I have no assets, nothing, then still it is, if you have something, always better to have a trust. So at least whatever is left, if after I pass, it goes to the beneficiaries without much of an hassle. That's why you want to have a trust.
What is the difference between will and a trust? How are they different? What do they offer individually?
Yes. A will, again, as I mentioned before, is a document which takes effect after your death. A trust continues while you're still alive, while you're operating the assets. And it is, so if you're even incapacitated, the trustee can operate with it. In a will, what happens is if there are any issues, somebody contests the will, then it goes to the court. I mean, it becomes a probate. There are a lot of issues. Whereas a living trust is one step ahead of the will. So that is why they always recommend you have a trust as well as a will. So a trust has a precedence over the will.
Okay, that was my next question. Let's say I have a trust and a will. Trust would have a precedence over the will.
Yes, that's correct.
But at the time of the death, the will have a value and it will be executed only during the time of death.
Yeah. See what happened, the trust document generally will have a reference to the will. So the trustee will fulfill the wishes that is stated in the will. Okay, so that is why both the documents are equally important, but the trust always has precedence over the will.
Okay. So let's come to the senior citizens. We started with the students and we are coming to a point where the senior citizens, right? It's most important for them. They have less money because they are not earning and they have
Yes.
to still pay the tax, state and the federal tax. So how do they plan and what are the incentives that they have? So just give some good tips and advices for the senior citizens how to proceed with and first of all, is the social security money, is it taxable? So all those things, please speak about it.
Yes. So to get social security benefit, you must have contributed to 40 quarters of earnings. Okay.
40
The
quarters
first
of what?
40 quarters you must have earned at
Okay.
least 10 years of earnings. Okay, the minimum earning, I mean, this at least $6,000 per year, let's say. It goes up from 4,000, it's been increasing every year. So let's say $5,000 per year they must have earnings. Then they will be eligible to collect Social Security benefit. So the benefit start depending on the age. The current requirement is anybody born before 53, they start collecting around 67. Okay, so that is the first thing. Then you are eligible for Medicare at the age of 65. Okay, and how much benefit you will get from Social Security depends on how much you are contributed to the Social Security wages over the period. And generally, the Social Security will send you a statement once you reach 62 that how much money you are eligible, how much you are contributed over the years, and how much money will be you will be getting each year. At 62, if you want to start collecting, you lose about 25% of the benefit. If you collect at 67, full retirement age, you get the full benefit. And some people differ until age 70, you get an additional 30% more. So, each one has their own reasoning for taking whether it's 62 or 67 or 70. Okay. Now, the question is how much of the Social Security will be taxed? It depends on your income. Let's say somebody earns joint filer less than $40,000, it will not be taxed. If it is more than $40,000, you will pay tax. The maximum tax you will pay is 85% of the Social Security wage will be taxable once you exceed your earnings limit. Okay, which is, I think, for joint filers, it is 32 to 40. For single filers, I think 25 starts, 25 to 32. So, I mean, we can calculate that amount for that. Okay. So, but let's say you have income from other sources and you get income from Social Security, 85% of Social Security, that's the maximum that will be taxed. You'll pay tax on 85% of the Social Security earnings.
So did you say like 85% of the social
Yes.
security is taxable?
It is taxable once your income exceeds the threshold, which is $44,000. If you're a married filing joint filer, or let's say my income is only Social Security wages, I don't pay any tax. But if you have other income like earning from savings, interest, dividend, pension, then the maximum they can tax is 85% of the wages. Then
So it is not like a regular individual, the senior citizen. Let's say my income is 100,000.
Yes.
40,000 is exempt. On the 60,000, I would pay, and again 85% is exempt and only pay the 25% on it.
No, that's not true. Let's say my income is 100,000, okay, including the Social Security wages. So let me say my Social Security benefit was $20,000. Okay, 85% of the 20,000, which is 17,000, will become taxed. Okay.
Okay.
So 15% will be exempt. Okay. Again, see, I think after 83,
it should be exempted. For the entire social security money should be exempt from tax.
That's yes, it should be. That's how they started. But I wouldn't be surprised in few years they will start taxing 100% of the
100%. Yes.
Yes.
Okay, so please continue. Like, 85% of it is taxable.
Yes.
Then,
so, but some people get the Social Security, not the benefit, the $300, $400 benefit for retired people who have not contributed. That will not be taxed. Okay. Some people who have not worked here, they can get Medicaid once they reach 65. Medicaid, that will not be taxable, but then your income limit has to be limited. If you have an asset more than $2,000, $4,000, you will not be eligible to collect Medicare benefits. So there are income limitations on the Medicare. On the supplementary Social Security benefit, they will not be taxable. People get, I think the income has gone up on supplementary benefit, but that will not be subject to tax. But Social Security benefit you are getting, if you exceed the threshold, then up to 85% will be taxed. It starts from 50% of the benefit, but then we go up to 85% of the benefit becomes taxed.
okay, what are the ways and means that senior citizens can save some tax on their income?
I mean, one of the things is they can look at tax-free bonds. Municipal bonds is one way where they can, save interest because that is not taxable. Okay. If they have converted into Roth, income received from Roth is not taxable. So that is another way where they can get less of the Social Security benefit taxed. Of course, long-term capital gain will be taxable. So, those kind of tax-free income, deferred income, they tax, even now, starting with 2020, there is no age limit for contributing to an IRA. If you have earned income, which is wage from salaries or self-employed business, you can contribute to an IRA. So that reduces your taxable income. So you have to look at each case is again different and see what is the best case under your circumstances.
So two things here, right? We talked about stock losses. Is it the same for crypto, and is it the same for senior citizens too?
Yes,
I'm
crypto
talking
also the
two
same
things.
thing. Yes,
Okay,
crypto
and is
is
it the
the
same
same thing.
for the
Yeah,
senior
go ahead.
citizens? No?
Yeah.
Is it the same for senior citizens too, or is it any different? If they are doing a trade market, right? If the senior citizens are in the trade market and doing trading like regular citizens, and do they treat the tax the same way as the individual?
Yes, it's the same treatment for senior citizens also. No exception. They can deduct maximum $3,000 loss. And the unused loss get carried over until it's used up. The crypto losses you can offset against the regular loss. So, and
This is contradictory. You said carried over, but earlier you said it's not spread across multiple years.
no. So let's say my loss this year is 3,000 or 10,000. I use 3,000 this year. The next year I carry over 7,000. So let's say I have no transaction in the following year. I take another $3,000 loss the second year. So out of 10, I use 3 in the first year, 3 in the second year. The third year, I use another 3. And the fourth year, I use 1,000 more. So that's how I use up all my losses.
So how many years you can do that?
Until you use up all the losses.
What if I make another big profit in the next year? Can I still claim mine?
Yes. So let's say the second year, you had a $10,000 gain. You had a 7,000 loss carryover. You can use the 7,000 against the gain. So you pay tax on the $3,000. Okay. Any loss, you can use it against the next year, against any gain you have.
But I thought I asked this question earlier and you said it's only for that year and you can only claim in that year. That's what I thought that's the answer. No.
No. Unused loss gets carried over until you use them. You can carry it forever.
Okay.
Unused loss gets carried over forever until you use them.
$3,000 every year.
$3,000, yes.
Later.
Yeah. If you have a gain in the subsequent years, you can offset the gain against all the carryover loss.
So I'm almost at the end of the session. I have one more thing to cover. It's about life insurance.
Yes.
And how do we assess the amount of life insurance that we need to take? And how do we use that as a vehicle for tax deduction? And how to better use our life insurance? So I bundled again everything into one.
Yes.
So
See,
give information as much as you can, and
yes. See, life insurance, the needs depends on each individual, whether it's a family requirement. So you want to decide how much money I need if something happens to me, how much is my family going to need. So based on that, you will take your insurance policy. Okay, let's say if something happens to me, my family needs $10,000 a month. Okay, for the next, until the kids get older, maybe for next 20 years. So you want to calculate, I need maybe $2 million or $200,000 or maybe $1 million. Okay, that's number one. Life insurance from a business perspective is not a deductible expense. Okay, you can use life insurance as a vehicle for saving money. Okay, you can, depending upon which policy. A lot of people use a term policy, which is not deductible and it doesn't carry generally surrender value. A whole life or variable policy may carry, they carry surrender value, So people use them to save money because the income from the earnings is not taxed. So, and a lot of people use that to save a lot of money. So after a certain age, they can start withdrawing money uh, from the life insurance, and maybe they don't pay any tax on it. You can use the life insurance as a way to take money when kids go to college. You can use a way to borrow money against your own life insurance. Okay, you can use for retirement purpose. Uh, for businesses, they have, uh, if you have a partnership, or corporation may buy uh, life insurance on the benefit of each of the members, stockholders, partners. You may, I may buy life insurance on my partner. So if something happens to him, his family gets money from the life insurance person. Similarly, vice versa. Okay, so there are again general limitation on life insurance. From the company's perspective, it's not a deductible expense. Companies offer as flexible benefit group life insurance policy up to $50,000. See, that is not taxable to the employee, but it's a deduction for the company. That's a flexible benefit plan that many large companies offer. So that is one way. But life insurance, a lot of people use it as a savings and accumulate money on there. There are different kinds of, there is another one which businesses use for life insurance, excuse me. So, captive insurance is another one where if you get a deduction on that one, you can put large amount of money. As it works as in a unique way, but you get a current deduction. But when you take the money out from the captive, they get a capital gain treatment. I mean, it's a topic on its own, but that is something companies use to defer income and save taxes. Cross life insurance, as I said, for the partners, you can take money insurance on each other life. So something happened because you want to give money to the family, if something happens to one of the partners. That is a good way. So if you take, that is another way where you can contribute for the benefit of the partner's family, if something happens to you. So, I mean, life insurance is used generally as a protection against liability. Term policy is used if something happens to you, the family gets the money immediately. Generally, the premiums are very low on a term policy, whereas in a surrender value or the premiums are higher, but you accumulate wealth on that.
So you kind of explaining that losses can be deferred. What incomes can be deferred to? What are the incomes that we can defer?
All income. All income. All income. Yes.
Nice. Yeah.
You can offset this from total income.
Okay. I'm back to senior citizens. Can they itemize their Medicare, Medicaid, and health expenses?
Yes, absolutely they can. But what happens is any expense over 7.5% of the adjustable income is deducted. So to itemize, see, the tax laws have changed. So if the senior citizen, if they are married, they get $25,000, $25,100 to be specific, of deduction, standard deduction. So they reduce the taxable income by $25,100. So unless you have a large medical expense, okay, that a medical expense should exceed 7.5% of your adjusted income. So let us take an example. Let's say somebody's adjusted income is $100,000. So any medical expense over 7.5%, which is 7,500, gets as an itemized deduction. So if your medical expense is $6,000, you have no use. For the state, maybe in some states you can get benefit on medical expenses. But from a federal point of view, that may not be beneficial unless somebody has a big procedure 1 year. They spend $30,000 on medical expenses. Then you get to deduct the excess over 7.5%. So my income again is 100,000. Over 7.5 is 7,500. I spent 30,000, so I can itemize 22,500.
What what tax incentives are available for short-term disability and long-term disability?
Okay, short-term disability generally is not taxable. Okay, long-term disability from the Social Security may not be taxable at all. Short-term disability, which let's say somebody goes because of a pregnancy or something, those will be taxable um, at the regular level. Only some portion of it will be taxable, not all of it. Each state is different, state disability fund. So some portion will be taxable, some portion will not be taxable. You will not be paying for the portion that you get from the state. The FICA Medicare tax will not be paid by you, but the employer will pay their share of the Medicare and Social Security bill.
So any tax changes or rules that are specific to this fiscal year?
2021,
Correct, yes.
yeah, I mean,
Anything that is specific to this fiscal year?
yes, 2021. Okay, I mean, there is a lot of change on the child care credit. Yeah, the government has been sending $250 or $300 depending on the age of the child. So when you prepare your return, you want to make sure you match the money you receive with the statement you get from the IRS. So some people say I got zero. You will be eligible to get that balance. That's the first thing. Then child care expenses. Okay, this year up to $8,000 worth of credit you can get, provided you
$8,000?
8,000, provided you incur that expense. For daycare expense.
Earlier it
Again
was, how much it was earlier?
3,000.
Okay, so that's the,
But then they raise the limit. But then it all depends on income limit and But that is another big thing that is there. The kiddie tax, it changed. 18, 19 was bad year after that they changed the rates. So that is one thing where the parent give accounts, savings accounts to the kids. The income from that earnings may be partially be not taxable. So that is another one, but there are rule changes on that. The
so I
kiddie
want to ask about the per diems, right? Most of the people, as they are working from homes, are there any changes on the per diem because they're not traveling, they're not spending on meals, they're not spending a lot on the traveling? Um, are there any changes about how we can draw the per diems?
the one of the rules for per diem is you must be traveling.
Yeah.
Okay.
So
But
because
most
people
people
are not traveling at all and
not
people
traveling. Yes.
are working from homes,
So
how do we
the,
avail the per diems?
yeah. See, for the benefit of the employer, if you're working from a different state, okay, maybe you have to see how you can get the benefit of per diem because you're not in the same place as, let's say, you are a New York employee and you have to work from a different state. Maybe you can look at the per diem aspect. That is, each case will again be different. If you're not
Even if you're
traveling,
not traveling.
yeah, if you're not traveling, it gets tough. But there are other things that you have to look at, maybe whether you can claim home office expense. Again, it is a moot point because Schedule A, where you itemize home office expense, it's not there anymore.
Examples of home office expense. Can you please give some examples of home
If
office?
you have a self-employed business, let's say you have a corporation, maybe you can take rent on the home. Why would you do that? Okay, a business pays rent, so you get rental income. You reduce the self-employed income, so you save 15.3% on the self-employed income. So taxable rent is at a lower rate. That's the first thing you want to do. If you are claiming home office expense, let's say you have a Schedule C home office expense, you can allocate your property tax, you can allocate your mortgage, you can claim repairs, maintenance, insurance, you know, any repairs, maintenance, insurance, utilities that you incur. Um, that can be apportioned based on the proportionate space you occupy on the house. Certain expenses can be direct expense like your internet cost, your telephone cost, maybe direct expenses of your home. So, I mean, you must have income to claim home office. If you have a loss, then probably you can allocate portion of your property tax and interest. And otherwise, you don't get the allocation of other expenses.
Got it. So that's a wealth of information and well of information you have provided. Is there anything else that you want to cover and give any suggestions or tips? We are almost coming to an end.
Yes.
Like
See,
you
the
to
last 2 years has been extremely challenging for a lot of years, a lot of people because of the COVID. But the government has been very nice because there's a lot of credits that is available to maybe self-employed individuals, companies. But it all depends on, again, individual cases, what you can get, what you cannot get. Maybe you get a R&D credit, a health insurance credit, or childcare credit for individuals. But a lot of business credits are available, energy credit. So you want to see which one you may be eligible for, and you don't want to lose any of those benefits that you get available. I mean, each case is different. And so the laws have changed so much. And some people make mistake when they file their return, the PPP loan, they take it as income and pay tax. They don't have to pay tax on the forgiven amount. So, the laws have changed so much in the last 2 years. So each one has to look at what will be beneficial for them. And, I think a lot of people miss out on that aspect of it because, there are so many changes. You cannot cover in 1 hour or 2 hours. So each one has to look at, hopefully, the CPS can guide them in capturing all the deduction and benefits that is available to them.
thank you very much, sir. Thank you for
Thank you.
not see any other questions on the YouTube. But thank you for coming over and spending your valuable time with us and
Sure.
giving.
They can always send us an email. They can send us an email or they can call us. We'll be very happy to help them.
Yes, I will pass on the email to
Yes.
members who attended the meeting today. And thank you so much for having us and delivering a good educational webinar. On behalf of the ATA, I thank you. And on behalf of myself also, I thank you because it's so much useful for me. And I thank అమెరికా తెలుగు సంఘానికి ఇలాంటి మంచి కార్యక్రమాలు నిర్వహిస్తున్నందుకు భుజాల గారి ఆధ్వర్యంలో అండ్ అనిల్ బొద్దిరెడ్డి గారు ఈరోజు మనకి సమన్వయకర్తగా ఇదంతా జూమ్ మీటింగ్ ఆర్గనైజ్ చేసి ఇదంతా లైవ్ స్ట్రీమింగ్ అంతా హెల్ప్ చేశారు. అందరికీ నా స్పెషల్ థ్యాంక్స్. అండ్ మనకి జూలైలో ఆటవారి మహోత్సవాలు జరుగుతున్నాయి. మొత్తం అందరికీ యువతకి కూడా చాలా ప్రోగ్రామ్స్ ఉన్నాయి. Keep watching ATA homepage, ataworld.com. ataworld.org. You would see all the upcoming programs and take a part and join us. And we take the next steps forward and many more webinars to come. And keep seeing you. Thank you, everyone. And Anya, you can close the live streaming now.
లెగరా లెగరా మనకు ఆహ్వానం అంటోంది ఆట వదరా వదరా మన తెలుగోడి ఐక్యాన్ని చాట వాషింగ్టన్ డీసీ వీధులు పోటెత్తాలిరా లోకం తెలుగోడి ఖ్యాతిని జై కొట్టాలిరా లెగరా లెగరా మనకు ఆహ్వానం అంటోంది ఆట వదరా వదరా మన తెలుగోడి ఐక్యాన్ని చాట వాషింగ్టన్ డీసీ వీధులు పోటెత్తాలిరా లోకం తెలుగోడి ఖ్యాతిని జై కొట్టాలిరా కష్టాలు వచ్చినా కన్నీళ్లు వచ్చినా భుజాలు తట్టనేస్తమే సభలకు వచ్చిన వితరణనిచ్చిన ఆ మాతృమట్టి కోసమే 90లోనే బీజం వేసి చెట్టైంది ఇవ్వాలిరా ఎన్నారైనా చిన్నలో పెట్టింది దీపాలిగా తెలుగు సంస్కృతికే అన్నీ హోరెత్తిందిరా జగతిన తెలుగాడి జెండా పైకెత్తిందిరా వాషింగ్టన్ డీసీ వీధులు పోటెత్తాలిరా లోకం తెలుగాడి ఖ్యాతిని జై కొట్టాలిరా
ఆకాశమే అక్కై అలరించే ఈ వేదిక తెలుగారికి ఆహ్వానమంతమే రండిగా
కళల వైభవం యువత ప్రాభవం అట్ట మహోత్సవం జరాలి అందరం చూడాలి సుందరం రెండేళ్ల కోసం భరం విచ్చేసిన తారాలోకం వినోద విన్యాసాలు వచ్చేసిన ప్రతిభకు ఇచ్చే సన్మాన ప్రోత్సాహాలు తెలుగు ఐక్యతకి ఆట చేసే వ్రతం చూడ పలికింది నీకు సుస్వాగతం వాషింగ్టన్ డీసీ వాషింగ్టన్